Are you buying and trading crypto on apps such as Coinbase or Robinhood? Well, this has to change today. Right now, actually. We gotta change this right now. Hey everyone, I hope you're doing well. My name is Ila HM and welcome to the channel. In this video, we're gonna talk about how you can buy and trade cryptocurrencies. First of all, you should definitely not be using Robinhood to buy cryptocurrencies, and that is because when you buy cryptos on Robinhood, you don't actually own the crypto. So let's say you buy Bitcoin on Robinhood, you cannot withdraw Bitcoin and send it to another Bitcoin address. What you have to do is sell Bitcoin and withdraw your US dollars and then deposit those US dollars into another exchange so you can go ahead and buy Bitcoin again, which defeats the whole purpose of Bitcoin and decentralization and the idea of owning your own money. Second of all, buying crypto on Coinbase or Gemini is not the best idea either, especially if you want to trade. Now I know what some of you are thinking. You're thinking, I'm not going to trade, so why the hell would I watch this video? Well, if you're also planning on investing for the long term or just buying and holding crypto for the long run, then this video is also for you. In fact, I barely trade myself. I used to trade a few years ago, but right now, even when I'm trading for the long term and buying and holding, which is my strategy right now, I am using crypto exchanges and not the regular apps that you might be using, such as Coinbase. So what am I using? I'm using Coinbase Pro. Now, I'm definitely not affiliated with Coinbase or Coinbase Pro or Gemini or Binance, but I'm gonna show you how to use Coinbase Pro. Many exchanges are similar, they have a similar interface, they have a few differences, but Coinbase Pro can be similar to Binance, can be similar to Binance US, can be similar to Bitfinex. When you get the idea of one of them, most of them would be easy. Now you might be wondering why you should use a crypto exchange while you can use those user-friendly apps which make it very easy and seamless to buy and sell cryptocurrency. Well, I'll tell you why. Number one is because you're gonna save so much on fees. These simple apps you use charge a lot of fees, which are usually 3, 4, 5% depending on if you're using credit or debit card. And second of all, you can decide what exact price you want to buy at. The amazing part about crypto exchanges is that you can set the exact price of the coin you want to buy it at. Let's say you want to buy Bitcoin at 50,000 and right now it's at 60,000. You can set something called the limit order at 50,000, and let's say the price hits 50,000, then this is when you automatically buy. On the apps, it's different. You can only execute something called the market order, which is basically you buying at the price it is right now, at the current price. I will dive deeper into details as the video goes through, but now I just want to mention that I'm not affiliated with any of those exchanges. You can use Coinbase Pro, you can use Binance, Binance US, Bitfinex, whatever you want. I'm not affiliated with any, and they're all similar. And once you get the whole idea, it would be fairly easy to transition from one exchange to another. Also, disclaimer guys, this is not financial advice. Trading cryptocurrency is very risky and you can make money with it, but you can also lose money with it. So make sure you do your own research and invest safely if you decide to do so. Now let me teach you how to use Coinbase Pro, whether you want to invest or trade cryptocurrency. And also towards the end of the video, I'm going to show you an amazing trading method that I believe is often very overlooked. However, it's extremely powerful and it's just underrated. And even if you don't want to trade, you just want to have a feel for the markets and how they move in the long run, this can be very beneficial to you, I guarantee it. Let's go. So right here, I have the Coinbase Pro open in front of me, and I'm going to start by explaining what this portion is, which is the trading pairs portion. What this means is, let's say I click on BTC USD. Basically, this is trading Bitcoin to US dollars, BTC USD, that's all it is. Now I know this is pretty obvious, but I'm just gonna explain everything I can. So here we have all USD, USDC, BTC, DAI, Ethereum. These are all trading pairs. What that means is that if I click on BTC, this is the cryptos, the altcoins basically, which is everything other than Bitcoin compared to Bitcoin. If I click on ETH BTC, this one is trading from Ethereum to Bitcoin. If you don't want to go from Ethereum to US dollars, you can go from Ethereum to Bitcoin, or you can go from Ethereum to DAI, for example. Or if you want to go from Link to Ethereum, these are fairly limited. There's only 3 of them with Ethereum, but Bitcoin has the most trading pairs with it, as you can see, and the most one is US dollars. So whatever you want to do, if you want to change from Bitcoin to Ethereum, then you click on the BTC Ethereum trading pair. If you want to go to US dollars, then you click on the USD. Or if you want to trade to the USDC, which is the stable coin that Coinbase has, you can also do that. But as you can see, there is also way less options. So USD is the one people mostly use. Now let's explain this portion right here. So for this part, if you want to buy cryptocurrency, you can buy it using 2 ways. Number one is a market order, and number 2 is a limit order. What a market order is buying the price of a cryptocurrency at this point in time, whatever the price is. Let's say right now, the price of Bitcoin is 59,392. As you can see, it's fluctuating right here. So if I click on market order and I want to buy $100 worth of Bitcoin, I can get a total of 0.001676, you get it, Bitcoins. So this one usually has a higher amount of fees, so I just don't do it at all. The downside of this is that you do not have control of what exact price you buy Bitcoin at. You just buy whatever is available. So let's say I click right now, I might buy a portion of those Bitcoins on 59,250 and another portion at 59,300 and another portion at 59,350, for example. So this is the downside of it, but the plus side is that it's instant and you can instantly buy. Also, you can definitely sell with a market order. You click on the sell button and you just sell however many you want to sell. Now, if you want to use the second option, which I recommend using if you want to use, this one has the least amount of fees and you can set the exact price you want to buy at. So let's say you want to buy Bitcoin at $55,000. All you have to do is click on the limit price, which is where it says USD. You type in 55,000 and then you click on the amount of Bitcoins you want to buy. Let's say you want to buy 1 Bitcoin, you click on 1. And sorry, you had to move the comma. Okay, there you go. So with this one, there are fees, but the beauty of this is that you can buy at $55,000 automatically. So let's say you set the limit order and you leave. And then let's say tomorrow when you're sleeping, the price drops down to 55,000. The order is automatically executed and you don't have to do anything. And you are guaranteed to buy the price at 55,000 if it drops to that price or lower. That's basically what a limit order is. And if you want to sell, let's say you want to sell 1 Bitcoin at, right now the price is $59,000. Let's say you want to sell and take your profits at $62,000 if you already have a Bitcoin, obviously, or a fraction of it. You put the price at $62,000 and you set that you want to sell 1 Bitcoin and you set the limit. And then when you sell it, if it goes up to 62,000 or higher, the price automatically sells. So this is what a limit order basically is. In a nutshell, it's very simple to use, and you can also click on advanced here and you can change it from good till cancelled or good till time. Let's say you want to set it just only for 2 days, but personally I only put it good till cancelled for most of my trade because, well, I actually want to execute the trade no matter when it is. So you can play around with the settings, whatever you want to your liking. Now, as you guys can see, there's a third option that says stop right here, which is basically a stop buy or a stop loss. I'll explain what they are. A stop loss is basically you setting the maximum amount you want to lose on a trade. So let's say the price of Bitcoin is $1, right? Just for example purposes. Let's say the price of Bitcoin is $1 and you buy it right now at $1. But you decide you don't want to lose more than 10%. So what you do is when you buy it at the price of $1, you can set a stop loss at 90 cents, which means that when the price of Bitcoin drops to 90 cents or lower, it automatically sells and cuts your losses short. That way you only lose 10% and nothing more, if that makes sense. Stop buy is the same thing. Let's say you are selling, but you're afraid that the price of the coin is going to go higher and you don't want to miss out on more than 5%. What you do is sell the coin or whatever you're selling, and then you put a stop buy 5% above it. I'll show it to you guys in person. So I'm going to click on Ethereum because I do believe I have some Ethereum on this. Okay, perfect. So right now the price of Ethereum is 1849. Let's say I want to set a stop loss because I own the Ethereum, so I set the stop loss in order for it to sell in case it drops below a certain price. Let's say I want it to instantly sell when it goes below 1500. So what I put is 1500 for the stop price, and then the number of Ethereum. As you can see, I have 0.07. I click on max because I want the whole number of Ethereums to sell, and then the limit price is, I believe it's the most, let's say it goes down to 1500, it's not going to instantly sell, but if it goes down to, let's say, 1505, as I said it will sell automatically. So I place sell order, just like that, place order, and then it's in the open orders right now. As you can see, there's a stop loss at $1,500 and it's going to sell this much. Now, none of them are filled because obviously we're still far away from that, and that's it. That's all there is to it. Let me cancel this one because I don't want to sell my Ethereums, I want to hold them long term. Now this part right here is the order book, which shows the live trades that are going on as we speak. As you can see, this moves very quickly because many people are buying and selling. Now if I put on Bitcoin again, you can see here that this is how many Bitcoins are being sold at this price. Now this is moving very quick because it's limited down to the 1 cent. If you notice here, there's only 1 cent difference between each. But then if I increase this just like that, you can see that this is how many Bitcoins are being sold at 59,170. This is how many Bitcoins are being bought at 59,160. The difference between this price and this price is called the spread. So basically, when someone is buying at this price and when someone is selling at the same price, when these two match, then here's when a trade gets executed. You can also execute a trade by, let's say you want to sell at 59,330. You can click on it. As you see, it can get filled right here, and then you can sell the amount of Bitcoins you want to sell. I don't use this for my trade. I just prefer typing it manually, but it can be useful sometimes. So here's the trading method I was telling you about, and that is trading with supports and resistances. I know it's very simple and sounds silly, but honestly it works perfectly, and sometimes all you need when you trade is just those, trading with supports and resistances and analyzing price action without all the complicated stuff like Fibonacci retracement and Fibonacci extensions and Elliott waves and all those complicated stuff. They all sound fancy, but honestly you don't really need them. Some people use them and are successful, but however, I found this to be the best way to trade and the simplest way, and I'm going to teach it to you guys. So whether you want to invest or long term or just buy and trade, or whether you just want to buy and hold, it's very important for you guys to know when to actually buy. Sometimes you want to buy at a good price instead of just buying the all-time high, or let's say when you hit a resistance, and I'll explain what that means. So a support is basically a price where people are buying the cryptocurrency, which basically is, let's say right here, if you notice, the price of Bitcoin went up, and then it went down, then up, then down, and it bounced off of this area right here almost. When it bounced off of it, what that means is that this is actually a support area. If you draw a horizontal line almost, right here, I have it drawn already. Okay, good. Let me erase these so we can do them from scratch again. Okay, so this area, notice that the price of Bitcoin bounced off of it, which means that people are buying around this area, which is about 30,000, right? But if you look at this area, people actually sold, which means that this is actually a resistance. If I draw the area right here, this shows that this one is a resistance. Now we bounced off of this, then we went down, and then it went up. Now if you look at this area, some people would sell this because they actually look and they say, okay, this is a previous resistance, we might not break out of it. However, when we did break out of it, this resistance became a support. So previous supports become resistances and previous resistances become support. So this one was a resistance, we blew out of it, then we went down and we supported right above it. So people were selling at about 42K, and then they started buying at 43K. And then same thing happened. It went up, and now we have this as a resistance area. So now what we must do is we can do one of two things. Either take profits when it reaches 60,000 if you think it's not gonna blow past it, or what you can do is wait for it to actually blow past it, and when it does, you can wait for it to pull back and then buy again around this area because it's gonna support. So what might end up happening is that, let's say it blows past it like that, and then it can go back down here, and then you can buy it around this area, and then it might continue going this way. Now, this is not guaranteed, and remember, technical analysis is learning how to react to the market and not learning how to predict the market or predict the future and what's going to go on. It's basically only that, learning how to react to certain technical patterns. I find supports and resistances to be very underrated and extremely helpful. Now, let me do another example. Let's open up the Ethereum chart, for example, and notice I'm going to put the monthly time frame so it's even more obvious. So if you look at this area, it went down. This is all the way since June 2016. It went up all the way. Disregard those lines. Let me remove those for you. Okay. It went all the way up here to 1400. That was in the 2017-2018 bull run. It went to 1400. Then it dropped all the way down back to $100 and actually $68 almost. So notice, if we draw a line right here, draw a horizontal line just like that, you're gonna notice that this one is a support, right? So it went down, jumped off the support. Now let's say right here you're still not confident to buy Ethereum. You could wait until it gets to this area again and see, okay, this was a support back here, so maybe it can support again this time, and let me buy some here. So let's say you buy some at this area, which is $81. You could have made, if you kept on holding, 1,500%, and that is only if you sold back here at the resistance where we saw the previous resistance. Let's say, as I said earlier, you decide that, okay, it might not break past the resistance, let me sell. You could have sold and made 1,500%. But if you waited for confirmation and saw that, oh, we actually broke out of it, you could have made an additional 500%, up to 2000%. So right now, the previous resistance became a support. Now let me put the weekly so it's more obvious. Notice, we got some resistance back here, but we broke out of it, and as soon as we broke out of it, we went down and bounced off of it. So the previous resistance became a support. And that's it. Fairly simple, guys. I know this may sound complicated, but rewind and listen to this again. And if you have any questions, feel free to let me know in the comments and I'll happily address them. But that's it. That's how I trade lately. I just find this way the best way to analyze and to look at stuff long term. So that's it for me. Thank you so much for watching. I really hope you enjoyed this video. Let me know if you have any questions in the comments down below, and let me know what your favorite trading methods are. Like the video if you enjoyed it, and I'll see you on the next one. Peace out.